U.S. stocks soared on Friday as investors pondered the possibility that the Fed may ease aggressive rate increases sooner than anticipated. In remarks at a meeting Friday, San Francisco Federal Reserve President Mary Daly said the U.S. central bank should avoid tipping the economy into an unforced downturn and that it was time to consider easing the pace of rate hikes. However, at the same time, investors also assessed a Wall Street Journal report indicating Fed policymakers are poised to deliver another interest rate increase of 0.75% at the Fed meeting November 1st and 2nd. But there may also be discussion of a possible smaller increase in December. Overall, the week was sharply higher thanks to mega rallies on Monday, Tuesday, and Friday. So far, third quarter earnings have held up better than many analysts had expected. Therefore, we may be closer to the end of the market downturn than we are to the beginning. And the more bear market rallies we see, the fewer that are left before we finally flush it all out. And in other news, around 5,000 residents of Riverside County in California received duplicate voter ballots ahead of the November midterm elections this week. But residents who received two ballots were advised to vote only once. As for me, I'm planning on voting early and often, which is the American way. And in other news, major convenience store chain Circle K will begin selling marijuana at its Florida gas stations. Well, it just goes to show you that this country has gone to pot. Two charts today, beginning here with the volatility index. This is the 2-year weekly chart, and the symbol in the upper left, as you can see, is $VIX using stockcharts.com. And we take a look at the volatility index because it's also known as the fear gauge. And basically, the VIX moves in the opposite direction of the market. So when the VIX is heading on up, that means the market is heading on down. But when the VIX heads down, the market heads up. And it looks like we may have topped here and we may be heading on down. I think at least that's the probabilities. And I would imagine that we're going to continue heading on down in the VIX for the next couple of weeks, maybe into months, which means we're going to have a market rally. Again, that's the probabilities in my humble opinion. All right. Let's now go to our chart. And we're now taking a look at the 20-year monthly chart on the iShares Russell 2000 ETF, and this serves as a pretty good proxy for the Russell 2000. And we're looking at the Russell 2000 simply because this index is slightly ahead of the other indices, which means that if the Russell 2000 can bottom and base here, then perhaps the other indices will follow suit relatively soon. Looking up here, we can see that there was the rollover and the move on down. Of course, a nice slice on down here through the 20 and the 50 EMAs, but it looks like we have a bottom that is trying to form here. And if you look at some of the shorter term charts, you'll see that we're heading on up just in the last several days, maybe bottoming and basing over the past few weeks or so. But I think we're going to head up again. That's the probability in my humble opinion. But let's take a look at the oscillators. Volume's not going to show you too much. Here the MAC, which is my primary oscillator, there's still a relatively wide margin between that slow line in red here and the fast line in black at that point there. And that means we still have time. There's a lot of repair that needs to be done to all of these indices, and it's going to take time. So we're not there yet, but I think we could be coming to a turn such as this relatively soon, but it's still going to be time before the fast line crosses back up and over the slow line on the way up, which is one of my trigger signals. You can see back here in 2009 The move in the fast line was there in early 2009, but it didn't cross until, say, mid-2009. Of course, early 2009 was the bottom of the market at that time, but if you want to be safe, you can wait for the fast line to move through that slow line. It's not guaranteed that the market's going to be heading on up, but it's a pretty good sign. Moving here into the other oscillators, taking a look at the histogram, you can see definite bottoming and basing occurring there. And of course, we're at a negative 6.45, so we have a ways to go before we cross through that zero line, several months. But we're starting to perhaps see a bottoming basing, and you see the same thing there in the price rate of change. Some sawtoothing occurring here. We're very negative, so it's going to take some time. But if you take a look at these oscillators, such as the price rate of change, and here into the relative index, we'll take a look at the stochastics relatively soon here too, but all of them seem to be showing an attempt at a bottom and base, with the RSI looking like it wants to head up, and let's just see if it heads up to the 50 or midline. But here into stochastics, you can see that we're pretty close on the separation between the fast line and the slow line. Back here in 2009, the fast line crossed up through in early 2009, so this is perhaps an indicator, an earlier indicator, let's say, than the MAC. So just watch that. As well, here is the Williams down in that oversold territory, doing a lot of sawtoothing, but it looks to also be a bottoming and basing pattern. Back on up here to the price chart. One last look. I think you have plenty of time before stocks really do bottom, base, and then head up. It's time to start making your list of stocks. I'll be going through some, but look, you need to find some of your own stocks as well. Of course, study the fundamentals, but you do have, I think, a few months, if not longer. So it's time to start looking at the stocks, following them, learning their patterns, and at the same time, save your cash. And for today, that's ChewDog Charts. Thank you.